things I tell people, don't ever set up a petty cash account. I think petty cash accounts are unwise because people don't account for them properly. So I'm going to show you how to account for it properly. And even with this particular problem, when they first did this problem, the author of the problem actually didn't get it right. They had it wrong. So even the textbook author didn't get the problem right. We had to correct them. Okay. Establishing a petty cash account to pay for minor cash expenditures. The very first thing you do is this. Okay. Is it 350? 350.
The second part to question 3, we just fill it out like we would
regularly
would.
So, what about question 3?
The required 2 part?
Yes.
We just fill it out.
That's the journal entries.
Just how we regularly would.
There you go. Yeah.
Okay.
This one represents the entry for the bank. You don't make an entry for the bank because you're not the bank.
Okay.
So whatever their difference is up there, it's up to them to take care of that. Okay? And then the second entry is the entry that the company would make. You would record the service fee, you would record accounts receivable, and then they're showing one entry to cash. I like it better when you break it down, but they, you get your points if you just do it this way. So. I don't really like bulk entries. Okay? And if you use the schedule that I provided, it'll help you with the reconciliation. Okay, petty cash accounts. Oh, let me do this too. Right here, I actually did a recording on this. Right here, at the very, very bottom, because we had this come up in class years ago, and so I did a slideshow, 5 minutes, petty cash and how to handle petty cash accounts. There's different ways to correct petty cash accounts. I think I showed you the right way and the wrong way on here as well. So if you're interested, you can go look at that. Okay, so a petty cash account is called an imprest account. On the books, what you're going to see from the day you establish to the day you close the petty cash account is $350. Because what that means is at any given time, you will have the sum of $350 in either cash, currency, coins, or receipts. Now, the mistake that people make with petty cash is they give people cash to just go do stuff. That's not how petty cash works. Petty cash is a reimbursement account. You reimburse somebody, you buy back the receipt, basically. If someone comes in with a receipt for $40 because they bought a bunch of stuff for the office, they give you the receipt, you give them the exact change in return, and the receipt goes in the petty cash box. So that at any given time, the sum of the coins and the currency and the receipts equals that $350. That's the error that people make, is they don't do that. They hand out the cash, they don't get the receipts in return, people don't bring them the receipts, and they also never reimburse the account. So the money just kind of disappears. Also, they make entries directly to petty cash, which is not the appropriate thing to do. You leave the $350 right there, and here's how you make the extra entries. Now, this was also the error that they made. Right here, the original problem showed all these credit card entries as petty cash entries. Okay, now, credit cards and cash are not the same thing. As you may have noticed in the list of cash, right, that problem where I showed you all the things that are cash, notice that credit cards was not one of those things. Credit cards are not cash. A credit account is something that you use to purchase things with, but a credit card by definition is a liability. It's an account payable, that's a whole other thing, right? That's not cash. So what we would do here, for these entries, is this. I've got repairs and maintenance. So it's 102, 57, and 67. Okay? That's going to show up in the accounts payable, credit card payable account. And this is another thing that people don't manage well in practice. What should happen with a credit card account? First of all, very few people should be authorized to use a credit card account. Secondly, every time someone uses the account, they need to bring you the receipt. and you then record that receipt on the books as the charge against the actual credit card account. So if you have a Visa card, you're going to credit the Visa card as payable, and you're going to show that expense right away. All right. So if somebody bought office supplies, you're going to show either you're going to debit the supplies account because they're going, in the shelf, and credit the credit card account. What should happen when you get the credit card statement at the end of every month is that statement should match all those charges. By the time you get the statement, you should already have all the charges. You should know what they are. All right? And if you're managing things, if your internal controls are done properly, you don't pay the card until you get all the receipts. That's the incentive. So people can't use the card until they provide all the receipts or some equivalent of those receipts to you, so you know where all the charges were. Obviously, Dallas Independent School District was not doing that. That's what they should have been doing, or they would have had the problem that they had with the secretary who was basically stealing merchandise from them. They were just, the bill would come in, they would pay it, and they had no idea where the money was going, which is a par for the course for a school district. They're notoriously bad at things like that. Now, the only actual petty cash expenditure we have is right here. They left out a. Okay. Actually, it would make me figure this out. Okay, the difference at the end of September, the fund contains $278 in cash. Now, I actually rewrote this problem, which they should not have done. This is not entirely complete. It should have $278 in cash and a receipt for $72. This problem actually isn't written all that well. But the implication here is that there was $72. There should be a receipt for $72. Now what will happen is the person managing the petty cash box will have cash and receipts, and they'll go to the treasurer or the controller on a periodic basis and get reimbursed. And what will happen then is that the controller or the treasurer will then buy the receipts from the petty cash manager. That's how it should be properly done. They couldn't even get the problem right. Yeah, you have to actually figure out that $72. It should say that there's a receipt for $72. It doesn't say that. It should. They're implying it, which is I don't think is good enough because you've never seen this before. So how would you know that? So I'll go back to my original advice. I think petty cash accounts are foolish. They take a lot of work to manage, and I don't think they provide a whole lot of benefit. Especially since can't you order pretty much anything online now? I mean, you can order everything online.
According to Uber Eats, almost. So according to Uber Eats, almost everything.
Almost everything.
That's what they say.
Is that what they say?
Mm-hmm.
I mean, you can, really. So the office manager can easily manage things that way, order everything, prepay it, and somebody can go pick it up and bring it in. There's really not any need, in my opinion, for petty cash accounts. I don't think there's even really much of a need for company credit cards anymore, unless people are actually traveling. If you have people traveling, then they're going to need a card because they have to rent a car and pay for a hotel and so on. But unless you're actually physically traveling for the job, I'm not even sure if people need those physical cards any longer, because everything can be done. I mean, that's one thing COVID did for us. It made everything deliverable. Yeah, I found through my house is actually a to-go margarita establishment. You can actually drive through margaritas. You can actually drive through and pick up a case of margaritas, apparently. It's in Austin, of course. All right, that's not exactly well done. It's okay, but you're not going to get any questions about petty cash. I just need to introduce the topic. You need to know that this is basically how it's kind of done. I did a recording to show you some more methods of managing petty cash, and really, if I were you, I would avoid it. But that's petty cash. There you go. All right. Questions on petty cash? No? Okay, problem number 5. This is, okay, this is good. This is kind of getting us comfortable with the idea of statement of cash flows. Not quite there yet, but soon. There's actually 2 different methods of preparing a statement of cash flows. I think I mentioned this early in the chapter 1, I believe. We have both the direct and indirect methods. I think we talked about that. And I I showed you the direct method, and we're gonna have to do the indirect method too, it's a little more complicated. There, okay. So, we have different types of, I know I went over this. And if you don't remember, I did a recording on saving the cash flow, so you'll know what these things are. We have three different types of activities, cash-related activities in businesses. We have the operating activities, which is basically what the company does for a living. Whatever it is that you do is going to be an operating activity. We want to make sure those cash flows are positive. We want positive cash inflows from what we do. If we have negative cash outflows from what we do, we have a problem. That's not sustainable. Right? You can't always be spending more than you're bringing in as far as operating activities. We also have investing activities, which is not the same thing for companies as it is for people. Investing activities for companies is purchasing non-current assets, property, plant, and equipment. Things that are going to make the business work. Right? And anything that lasts longer than 1 year. Okay? That's investing. Financing is long-term borrowing and common stock transactions of the company's own stock. Okay? So, we want to figure out our cash flows for the year, starting with issuing common stock for cash, $53,000. So I'm going to call that what? A financing activity. This is my own common stock. It's a cash inflow of $53,000. I'm going to buy building and land with cash. That's an investing activity. An outflow, negative, of $38,000. Okay? Provide services to customers on account. Remember to read your problems. On account means not cash. It's an account. That's an account receivable. On account means either I did work for somebody and didn't get paid yet, or if I bought supplies or materials on account, it means I have a vendor account. I haven't paid them yet. On account means not cash. Okay?
What is NA means not cash?
Hmm?
It says NA. So NA means
Oh,
not,
NA, not applicable.
not applicable.
Yeah. Is that not uncommon and
Well,
social?
I know what it meant. I didn't
okay.
know if it meant something else.
Well,
here
no,
in
I
this
don't mean to be
class.
rude, but I'm older than you. And I use terminology you guys have never heard of before. Because I'm from a whole different generation. So sometimes I forget the terms are no longer being used. That's why I check. Like, you guys don't write checks, do you? Yeah, that's what I thought. I have a checkbook. I have an actual checkbook that I fill out with, like with ink. And I have stamps and I send things to people. I know, yeah. My son thinks it's funny too. Okay, pay utilities on building. Why would you do that? Well, that's an outflow, right? And it's an operating activity. You don't have any reason to pay utilities on somebody else's building. You're paying utilities on your building because it's part of your operating activities. That's a normal business expense, paying utilities. It's a cash outflow, okay? And it's an operating activities outflow. Collecting cash from customer on account, that's also an operating inflow, okay? Pay salaries, operating activity. Pay dividends. This is a financing activity. The reason I highlighted this is that there were versions of the problem that didn't actually include the dividends. So, see, my beginning cash balance is $4,700. It says so in the problem. There. That should be my ending cash balance. There we go. So that's my cash flows for the year. Financing, investing, not applicable, operating, financing, that's the total. And I should have a total of $10,250. And here's where it comes from. The beginning balance is right there. Okay? That's it.